Good morning, Alex and friends. I'm Grace. Today is Monday, August 25th, 2025, and you're listening to Alex's News. The high in Riverside today will reach 83.5 degrees Fahrenheit, with a comfortable low of 72.4. Later in the show, we'll examine a significant constitutional question. Can a president deploy federal troops to cities without the express will of local authorities? This debate has major implications for states, rights, and federal power. Then, we'll shift our focus to the financial markets, exploring the surprising reasons behind Wall Street's surge following Jerome Powell's recent warning regarding the job market. What exactly led to this unexpected positive reaction? All these stories and much more are coming up. Stay tuned for Alex's News. Welcome back, everyone. We begin this morning with significant developments out of Washington, D.C., where the military presence has notably escalated. National Guard units deployed there have now begun carrying firearms, a move that is certainly raising eyebrows and questions. For more on this, we turn to our national reporter, Ethan. Ethan, can you walk us through what's happening?
Grace, it's certainly a weighty situation, no pun intended, with troops now literally armed to the teeth. According to reporting from the Bangor Daily News, The Hindu, and Fox 10 News, some National Guard units in Washington, D.C. have indeed begun carrying firearms. This follows a directive issued late last week by President Trump's Defense Secretary Pete Hegseth, authorizing the arming of these troops.
So when did this arming officially begin, and what kind of weapons are we talking about?
The arming of these units commenced just yesterday, Sunday, August 24, 2025. Specifically, troops assigned to missions like patrolling for a law enforcement presence are now carrying either handguns or rifles, including M17 pistols or M4 rifles. An Associated Press photographer observed members of the South Carolina National Guard with holstered handguns outside Union Station and at the Washington Metro Gallery Place Station on Sunday. Units involved in transportation or administration roles are expected to remain unarmed, and all armed units have undergone training under strict rules of engagement. Force is to be used only as a last resort in response to imminent threats, as reported by Fox 10 News.
This deployment itself has been in place for a couple of weeks now, correct? What was the president's initial justification for sending in the Guard?
That's right, Grace. This deployment began on August 11, 2025, exactly 14 days ago. President Trump declared a, quote, public safety emergency, end quote, in D.C., and temporarily placed the Washington, D.C. Police Department under federal control. He cited a need for a, quote, law enforcement crackdown, end quote, to combat crime, describing D.C. as a, quote, hellhole, end quote, that had become, quote, safe, end quote, due to his intervention, according to Fox 10 News.
And how many troops are we talking about now? Has this expansion been met with any local resistance?
Initially, it involved 800 members of the District of Columbia National Guard. That number has since grown to nearly 2,000 National Guard members, with additional troops sent from 6 Republican-led states. This expanded military presence, Grace, has drawn, quote, sporadic protests, end quote, from local D.C. residents, as the Bangor Daily News and The Hindu have reported.
Ethan, I remember hearing that the president's justification for this crackdown was contradicted by actual crime statistics. Can you shed some light on that?
Absolutely, Grace. The president's rationale seems to be on shaky ground, statistically speaking. News reports, including from Fox 10 News, indicate that official data from D.C.'s Metropolitan Police Department, or MPD, showed violent crime had actually decreased and was at a 30-year low prior to his intervention.
That's quite a contrast. Can you give us some of those numbers?
Certainly. Official MPD data as of August 11, 2025, showed an unmistakable and large drop in reported violence. Overall violent crime was down 26% year over year. Homicides were down by 12%. Sex abuse saw a substantial 49% reduction, and carjackings declined significantly. July of this year reported 16 incidents, a 75% reduction from the June 2023 peak of 140 incidents. As detailed by Fox5DC.com, and Forbes.com.
Those numbers certainly don't paint a picture of a, quote, hellhole, end quote. Now, the president has also hinted at expanding these deployments to other major cities. What do we know about those plans and the reactions to them?
Yes, Grace, it appears D.C. might just be the tip of the iceberg. Or should I say, the tip of the rifle. President Trump is reportedly considering expanding these deployments to other Democratic-led cities, specifically naming Baltimore, Chicago, and New York. He often describes these cities, which frequently have black mayors and majority-minority populations, as dangerous and filthy, according to The Hindu.
How are the leaders in those cities responding to these potential federal interventions?
They are certainly not rolling out the welcome mat. Maryland Governor Wes Moore criticized Trump's use of federal power. Illinois Governor J.B. Pritzker stated there is no emergency warranting National Guard deployment in Chicago, accusing Trump of, quote, manufacturing a crisis, end quote, as the Bangor Daily News reported. Chicago Mayor Brandon Johnson has vowed to sue to block any such move, calling Trump a, quote, tyrant, end quote. Even Reverend Al Sharpton has suggested the Guard's presence is, quote, laced with bigotry and racism, end quote, serving to profile minority populations.
Ethan, this all sounds like a constitutional conundrum. D.C. has a unique status. But what about deploying federal troops in states without their consent? How does that work legally?
You've hit the nail on the head, Grace. Washington, D.C. is a federal district, which grants the president unusually sweeping powers compared to states. Under the D.C. Home Rule Act of 1973, specifically Section 740, the president can direct the mayor to provide MPD services for, quote, federal purposes, end quote, if, quote, special conditions of an emergency nature exist, end quote. This allows a presidential takeover of the D.C. police for up to 30 days, with congressional notification, as Wikipedia.org notes.
Has this specific power been used before to take full control of the police?
Not in this manner, Grace. President Trump's August 11th invocation of Section 740 to take full control of the MPD was the first time in history this specific emergency power was used in this way. Local D.C. officials, including Mayor Muriel Bowser, criticized it, with Councilmember Charles Allen calling it an, quote, authoritarian takeover, end quote. The district even filed a federal lawsuit challenging this, and a federal judge expressed skepticism, leading the administration to partially retreat and leave the D.C. police chief in charge, as lawfaremedia.org detailed.
So for deployments in actual states, not D.C., what are the legal frameworks the president would have to operate under?
For states, the president's authority primarily hinges on the Insurrection Act, which is the main exception to the Posse Comitatus Act. The Posse Comitatus Act generally prohibits using federal military personnel for domestic civilian law enforcement. The Insurrection Act, however, allows deployment with state consent, or, crucially, without it under certain conditions, such as when, quote, unlawful obstructions, combinations, or assemblages, or rebellion, end quote, make it impracticable to enforce federal law or to suppress domestic violence, as the Brennan Center for Justice outlines.
That sounds like a lot of discretion for the president. Are there any precedents for states challenging these kinds of deployments?
There is substantial discretion, and the language is considered, quote, dangerously vague and overbroad, end quote, according to the Brennan Center. As for challenges, states can certainly pursue legal action. We have a significant precedent-setting case in California's challenge, Newsom versus Trump, from 2025. California, joined by 20 other states, sued after President Trump federalized their National Guard. A U.S. district judge initially sided with California, finding that protests, quote, fall far short of rebellion, end quote. But an appeals court later ruled the deployment could continue, as reported by PBS.org. The outcome of this case is expected to have a major impact.
Ethan, thank you for breaking down such a complex and evolving situation. It's clear there's a lot to keep an eye on here. That was Ethan with our first story of the morning.
My pleasure, Grace.
Welcome back, everyone. For our second story this morning, we are turning our attention to the global financial markets, which have been quite a roller coaster ride. Joining us to unpick the latest developments is our seasoned financial reporter, Chloe. Chloe, it seems the markets are having quite the reaction to Federal Reserve Chair Jerome Powell's recent signals. What's the latest?
Grace, it's certainly been a mixed bag globally, proving that not all markets are cut from the same cloth. Today, Monday, August 25th, 2025, European markets generally open lower. Germany's DAX, for example, was down 0.2%, and the CAC 40 in Paris lost 0.6%. Britain's markets were closed for a holiday. However, as reporting from financial news outlets shows, Asian shares broadly advanced, tracking a significant rally we saw on Wall Street last Friday. It seems the optimism is quite infectious, even if not universally spread.
So a tale of two markets there. What exactly did Chair Powell say at the Jackson Hole Symposium last Friday that sent such ripples through the global economy?
Powell's remarks were quite pivotal, Grace. He focused on what he termed risks for the job market following a weaker job growth report. According to the statements, he acknowledged, quote, downside risks to employment and also the impact of tariffs on inflation. His key quote, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance, was widely interpreted by market analysts as a clear signal for impending interest rate cuts. When he says restrictive territory, he means that current interest rates are high enough to potentially slow economic growth and employment, making a cut seem necessary.
An interesting turn of phrase that certainly made an impact. What does this signal mean for the likelihood of a rate cut, and when could we see one?
Well, Grace, the market probabilities quickly shifted. Data compiled by financial news agencies indicates an 84% chance of a Fed rate cut as early as its September meeting. That's just weeks away. Furthermore, expectations are now leaning towards at least 100 basis points of easing by mid-2026. To put that in simpler terms, a basis point is 1/100th of a percentage point, so 100 basis points equals a full 1% cut. Lower interest rates are generally seen as a boon for the economy, as they stimulate investment and spending. But there's always a flip side. They can also fuel inflation, so it's a delicate balancing act for the Fed.
Indeed, quite the tightrope walk. You mentioned Wall Street rallied on Friday. Can you give us the details of that initial market enthusiasm?
Absolutely, Grace. Wall Street certainly did not hold back. The S&P 500 leaped 1.5%, and the Dow Industrials soared 1.9% to a new record. Not to be outdone, the Nasdaq Composite jumped 1.9%. Interestingly, smaller companies, represented by the Russell 2000 index, surged 3.9%. This is because these smaller companies are more sensitive to easier borrowing conditions that come with lower interest rates. Treasury yields also took a dive, with the 10-year Treasury yield dropping to 4.25% and the 2-year Treasury yield sinking to 3.69%, a strong indicator of investor confidence shifting to less risky assets like bonds.
So Wall Street was really feeling the Powell power, if you will. How did that translate to the Asian markets today?
Asian markets certainly caught the market momentum, Grace. Hong Kong's Hang Seng Index closed 1.9% higher, reaching a nearly 4-year high. The Shanghai Composite Index surged 1.5% to a decade high. Taiwan's TAIEX gained 2.2%, with semiconductor giant TSMC Corp. S shares advancing 3.1%. Tokyo's Nikkei 225 rose 0.4%, largely led by computer chip-related companies. South Korea's Kospi climbed 1.3%. Even smaller gains were seen in Australia's S&P ASX 200, Bangkok's SET, and India's Sensex. Analysts, according to financial reporting, attributed this surge to the prospect of easier monetary policy, noting Asia's catch-up mode and anticipating sustained risk appetite.
That's a strong showing for Asia, but Chloe, there was another significant market driver last Friday that seems to be independently fueling tech-heavy indices. Can you tell us about the Intel deal?
You're right, Grace, that was a huge one. Concurrently on Friday, President Donald Trump announced that Intel agreed to grant the U.S. government a 10% stake in the company. This news sent Intel's shares climbing 5.5% and boosted other The U.S. government acquired approximately 433.3 million shares at $20.47 per share, totaling around $8.9 billion. This was funded primarily by $5.7 billion in previously awarded CHIPS Act grants and an additional $3.2 billion. It also includes a 5-year warrant for an additional 5% stake if Intel's foundry ownership drops below 51%.
That sounds like an extraordinary intervention. What's the rationale behind it?
Indeed, Grace. Both President Trump and Intel CEO Lip-Gu Tan lauded the deal as a, quote, great partnership aimed at strengthening U.S. leadership in semiconductors and national security by reducing dependence on overseas chip manufacturing, particularly against China. While some critics called it a dangerous intrusion, precedents exist, and it's seen as a direct government industrial policy significantly boosting the technology and semiconductor sectors. This, according to technology news outlets, contributed to AI supply chain optimism, independently driving gains for tech-heavy indices and firms like SoftBank Group.
So a lot of optimism swirling, Chloe. But when we look at history, does this kind of initial market cheer always hold up, especially when rate cuts are tied to job market concerns, as Powell indicated?
That's a crucial question, Grace, and the historical data, according to economic reports, presents a more nuanced picture. When the Federal Reserve cuts rates primarily due to a deteriorating U.S. labor market or impending recession, which Powell's comments on downside risks to employment seem to align with, the S&P 500 and Dow Jones Industrial Average have often shown somewhat lackluster or even negative returns in the 6 to 12 months following the first cut. For instance, declines followed initial cuts in 1973, 1981, 2001, and 2007, averaging a minus 20.5% decline in such scenarios.
So, if history is any indicator, this current market glow might not last.
Exactly. In contrast, when rate cuts are for normalization in a robust economy, stock market performance is much stronger, averaging over 20% return. But Powell's explicit focus on labor market weakness aligns with those historical recessionary cuts, challenging the immediate optimism. Factors like monetary policy lag effects and high market valuations suggest that long-term performance could be quite challenging if these labor market concerns lead to a more significant economic downturn, potentially making it a sell the news event. We'll certainly be watching how this plays out.
Thank you, Chloe, for that insightful and comprehensive look at the market. It certainly gives us a lot to digest. We appreciate you breaking down the numbers and the historical context. And that's our second story for this morning. When we come back, we'll be discussing. Here are some other headlines. In international relations, a diplomatic brouhaha is percolating between Paris and Washington. The French government has summoned the U.S. ambassador after he published a scathing letter accusing President Macron's government of not doing enough to combat a, quote, dramatic rise of anti-Semitism. France called the letter unacceptable and a violation of its internal affairs. The U.S. State Department, however, is standing by its ambassador, saying he is doing a great job advancing American interests. The ambassador's letter directly linked the rise in anti-Semitic acts to France's criticism of Israel and its intent to recognize a Palestinian state, a claim the French government firmly rejects. Meanwhile, sparks are flying between Moscow and Kyiv. Russian officials are accusing Ukraine of launching a drone strike on the Kursk nuclear power plant in western Russia, an attack they say happened on Ukraine's own Independence Day. Moscow claims the drone caused a fire and a partial reduction in the plant's power output. Ukrainian officials have flatly denied the accusation, calling it, quote, false information. The UN's nuclear watchdog, the IAEA, says it is aware of the reports but cannot independently verify them, though it confirmed radiation levels in the area remain normal. In New York, the legendary and long-elusive leader of the Sinaloa cartel is expected to finally face the bar of justice. Ismael El Mayo Zambada is anticipated to plead guilty to federal charges in a Brooklyn courtroom today. The 77-year-old, who was a fugitive for over 2 decades before his arrest in Texas last year, will likely admit to racketeering and running a continuing criminal enterprise. The plea comes after federal prosecutors announced they would not seek the death penalty, bringing a potential end to one of the longest manhunts in the war on drugs. Here in Washington, it's a high-stakes summit at the White House, as South Korean President Lee Jae-myung meets with President Trump. Topping the agenda is a recently negotiated trade deal that will see South Korea invest $350 billion in the U.S. economy. The two leaders will also discuss modernizing their 71-year-old military alliance and addressing North Korea's continued refusal to engage in dialogue. In an interesting bit of preparation, President Lee reportedly studied President Trump's book, The Art of the Deal, hoping to make a solid agreement. And in the world of business, Keurig Dr. Pepper is brewing up a bold new strategy. The company has announced an $18 billion all-cash deal to acquire JDE Peet's, the parent company of Peet's Coffee. This deal is a real shakeup, as the new combined entity will then immediately split into 2 separate, publicly traded companies. One will be a global coffee powerhouse, combining brands like Keurig and Peet's, while the other will be a North American beverage giant focused on brands like Dr. Pepper, Snapple, and 7-Up. The move is seen as a way to create 2 more focused companies and re-energize Keurig's coffee division, which has recently seen sluggish sales. That's all we have for now. Today's episode was made by Alexander King with Claude Sonnet 4.0, Gemini Pro 2.5, Gemini Flash 2.5, and Google Cloud Text-to-Speech. I hope you have a great day. I'll see you tomorrow, Alex.